Morning everybody, this is Alex, Senior Account Executive with your morning European session outlook. We'll start of course with the North American markets where we had the GDP annualized for the fourth quarter 0.6% better than expected at 1%, and the GDP price index also coming out at 1%. The goods trade balance came out $900 million worse than expected, and the core personal consumption expenditure price index year on year came out 0.5% better than expected at 1.7%. The month on month came out 0.1% better than expected at 0.3%. Good inflation data, which is important. The personal spending for January was 0.2% better than expected at 0.5%. And the personal income month on month 0.1% better than expected at 0.5%. The dollar surged against its main rivals on Friday and logged its first weekly gain out of 4 against the Japanese yen after a raft of economic data challenged the idea the US is tipping toward recession. Stronger economic reports might embolden select Federal Reserve policymakers who believe the group should be open to raising interest rates at the Fed's next meeting in March, lifting the appeal of dollar-denominated assets. The Dow and Nasdaq, they ended up with very small movements downwards. Dow is 7 points down. The Dixie is up to 97.94 from 97.21, and the biggest mover on the USD was USD JPY, 85 pips up. The Tier 2 news for today is Chicago Purchasing Managers Index for February, pending home sales month on month and year on year. And from Canada, we have the current account for the fourth quarter. By the end of the week, basically, we have the most important event, which is going to be the non-farm payrolls on Friday. All right, on to the EU markets. Looking ahead, the preliminary set of February's Eurozone CPI figures is in focus. The core year-on-year inflation rate is expected to decline to 0.9% from the 1% recorded in January. Last week's analogs report Germany, the currency bloc largest economy, proved disappointing relative to consensus forecast. A similar result on the region-wide metric may boost bets on ECB stimulus expansion at next month's policy meeting, weighing on the euro. All right, on to the United Kingdom. The pound had its worst week since the start of the recession in 2009, when the Bank of England was considering launching a QE program. The total losses for the week were 3.8% versus the dollar, adding to the 5.4% from the beginning of the year. Sterling closed the week with a 1.9% drop against the euro. This is a result of a combination of factors including unsteady growth, a deficit in the trade and current accounts, and most of all, the mass Brexit hysteria. The FTSE 100 gained 34 points on Friday and closed at 60.73. The 10-year gilt yields closed at 1.45% on Friday. Biggest movers on currency pairs were the GDP Canadian dollar, 182 pips down on Friday, 260 pips range, and the GDP New Zealand dollar, 200 pips up on Friday, 320 pips range, opened with the 100 pips gap and added another 100 pips up today already. The most important event from the UK is the consumer inflation expectations coming out during the end of the trading week. All right, on to the Asian and Pacific markets, mainly Pacific. The New Zealand dollar underperformed to start the trading week after a string of disappointing data releases fueled RBNZ, the Royal Bank of New Zealand rate cut speculation. A measure of business confidence from ANZ Bank fell by the most since October. A separate report showed building permits fell 8.2%, making for the biggest drawdown since September 2014. Australian dollar, US dollar edged slightly lower after Australian companies' profits dropped by 2.8% for the quarter in the fourth quarter versus expectations of 1.8% decrease. Inventories unexpectedly contracted for the first time since the fourth quarter of 2014, dropping 0.4%. Economists were looking for a 0.1% increase ahead of the release. The move on the Australian dollar, US dollar on Friday ended 110 pips down. We will see the Royal Bank of Australia monetary policy announcement overnight tonight. The markets price a probability of an interest rate cut at this meeting at only 5%, so no expectations there. For commodities, we have the Baker Hughes Oil Rig Count. It fell by 13 to 400 for the week ending on February 19th, marking the 10th straight week of such declines. The US Oil Rig Count is at its lowest level since December 2009. Gold had a range of $29 at $12.26 now. Silver had a range of 47 cents at $14.64 now. Crude oil had a $2 range at $32.70 now, and natural gas is trading at $1.71 at the moment with a range of 7 cents. All right, thank you everybody. This was today's European session outlook. I will see you next time. Goodbye.